Welcome back. Hope you're having a good Friday morning. It's been challenging times for the markets of late, but over the longer duration, the market should see, good compounded returns. So we'll have to see how the near term goes, but the longer term, the market should look quite good. Let's get in a call on a couple of stocks. We have Siddhartha Khemka, Head Retail Research at Motilal Oswal, who joins us on the show. Hi, Sid. Good morning. Good to see you win. Let's talk about the tech numbers first. TCS as well as Tata Elxsi. Yesterday, you had the tech index itself that ended at the low point of the day. Your view on the numbers and also what's the read-through for the tech pack? What do you like best?
Good morning, Nigel. Glad to be on the show. So if you look at TCS, broadly in-line numbers, you'd say revenue a bit miss. But what was the good part was, or what was encouraging was the management commentary about the improvement in the demand scenario. It clearly indicates that discretionary tech spending is up on the rise, and we are seeing that through spreading not only to the BFSI sector, but also other verticals such as high-tech and retail, where the tech spend recovery is expected in the next few quarters. So I think that's a very positive read-through for the large IT companies, especially for the IT services companies. And the other part was the deal wins and the TCVs, so the contract values, that continues to remain strong. One peculiar point that we saw is that there was more of small deals rather than large mega deal wins, which again shows that the granularity in the order book, which is more sustainable going forward. So net, I think a good read-through for other IT companies, large IT services companies, for example, HCL Tech, Infosys, LTIM, we believe that should be positive going forward. The other company, Tata Elxsi, I think the ERD spends, that is after a very significant good growth, is seeing a decline and is not a positive read-through, not only for Tata Elxsi, but the others in the similar space. For example, you have KPIT, you have the LTTS. So these three, I think, could be under pressure on back of the weak Tata Elxsi numbers, but a positive read-through for Infosys, HCL Tech, LTIM from TCS numbers.
Okay, got that. Hi, Siddharth. Good to have you on the show and happy Friday to you. Do you have any interest in these city gas distribution stocks? And they dance around to news, quite rapidly. We had the massive derating earlier on, a couple of weeks back, and now that they're getting a little more gas than what was, earlier projected, we saw a relief rally in the likes of IGL play out yesterday as well. What would your thoughts be? Would you look at anything here?
Yeah, good morning. Thank you, and happy Friday to you too as well. If you look at the gas space, there has been changes in regulations and the recent news flows about the lower gas allocation from the domestic, the APM gas. That was a bit negative. But yesterday, IGL in its press release has stated that the domestic gas allocation has been increased by 31% with effect from Jan. I think that's a very big positive. What we had seen earlier is that with the company getting lesser allocation from APM, they would have to buy gas from outside, and that would lead to higher cost. And hence we saw some of the companies, especially IGL, taking a price hike in the northern region, barring Delhi. But Delhi is the key region for them. 60-70% of the business comes from there. But now with this news, I think that's positive. The other news that came in was MGL taking a price hike, which had not taken the price hike after IGL. So I think that's also a positive read-through. So within both the companies, we would be more tuned towards an MGL, where again today they have taken a price hike in the Mumbai region. They're much more stable in terms of impact from the overall regulation. Plus, they have also been allocated more gas in the recent update. So I think among the two, IGL, MGL, we would prefer an MGL, given its stronghold in the Mumbai region, as well as the stable business environment here.
Okay, all right. I think, there's 20 minutes to go for the pre-open session. So we're slowly coming around with some of this. Siddharth, FMCG, the index, maybe it already sold off. It did sell off. Oil and gas and FMCG were two areas which saw a fair bit of selling. Yesterday, we saw some signs of life. Nestle, HUL, Britannia, Tata Consumer, these are all names just in the Nifty, not going outside the Nifty, which were the top gainers. Any thoughts here?
Yeah, hi Prashant, good morning. I think, yes, if you look at in the current volatile environment, while in terms of earnings, you would not expect a strong earnings in the base consumption or the staples business, given the weak demand and sluggish urban segment. What has been seen is that valuations are comfortable, and given the market overall environment and the sell-off, there does emerge value buying in some of these stocks, where you would expect that during the course of the year you would see some recovery, because that these are sectors where you would see demand coming back in 1 or 2 or more quarters, with the some of the raw material prices being stable. So what we like HUL among the largest players, most diversified business. ITC is looking very strong, and with now the demerger thing done with, the focus would be on the core business of cigarettes and FMCG. So I would say within the staples, what one could focus on, HUL, where we have a buy rating target price of 3,100, and ITC again looks attractive at the current valuation.
All right, got that. Siddharth, thanks for that. We do need to